Welcome back to Stocklabs for another market recap. We are fast approaching the end of summer, so 3 whole weeks into August now, and hasn't been great for the market at all, really, this month. And this week was no exception. It was pretty lousy. Coming in, sort of expected a bounce early in the week, which I think Monday was up, but rest of the week, none of that held. Everything kind of ended up leaking lower. I mean, the dip on Friday ended up sort of getting bought. I mean, market closed higher than it opened, but it was still barely flat, or I think a couple indices were green, couple were flat or barely red. So yeah, I mean, was not a strong week at all. Weekly performance sort of reflects that. Qs were down 2.25. S&P was down almost 2.25. Dow was down 2.3, and IWM was down 3.3. 100 basis points worse than the other indices. TLT bonds down 1.65% again this week. Bonds have become the story. I've been talking about it for a few weeks that, the market has priced in a bunch of rate cuts for the coming 12 months, but the, 10-year, 30-year, these bond yields are already, pushing up to and trying to challenge last year's highs. So it looks like there's pressure in the fixed income markets. The bond yields are looking like they're gonna break out. Fed is also getting kind of nervous. You can see that they're starting to second guess kind of what the long run expectation should be for rates, and market definitely doesn't like it when it kind of starts sniffing out that the Fed doesn't really have a grasp on what it's supposed to be doing. So we'll see where it goes. We'll see where it goes from here, but that's kind of the general impression from the market right now. Industries, you can see blood red across the board. Tech was the big loser, down 4% on a median basis. Healthcare, not far behind, down 3.5%. And every sector was down at least 2.5% on a median. Utilities are down 2.25%, but everything else down 2.5% to 3%. No real places to hide out. It was kind of just general selling everywhere. We don't have any. Okay, there's 3 sectors that are flat. Tankers up 1%. Every other sector in the market down for the week. And the ones that are down sizably are some of these ones that you see have a lot of specs in them. So EV type stuff, solar stuff, again, another EV, biotechs, Chinese burritos, just anything out of China. Yeah, so it's tough week for the bulls overall. They really kind of got walloped here. We've got 26 sectors down 5%. I mean, that's not really egregious, but the fact that there were none green on the week sort of just accentuated the ones that were trading to the downside. So, yeah, bad week breadth-wise on industries. If we check the breadth by market cap, then most likely we get a pretty similar picture. Okay. 1 to 5 billion down 3.5%, and 5 to 10 billion down 2.8. 10 to 50 billion down 3%, almost touch under. 50 to 100 billion. They're down 2.44%. And 100 billion plus. These are down 2.2 market perform. So everything almost on an average across the market was down 2 to 3% for the week. So it was kind of hard to find any place that sort of stands out that was attracting any kind of interest. As soon as the rates sort of were pressing those October highs and at times trying to punch through them, market just sort of has fallen out of bed a little bit. So, yeah, take a look at intelligence for this week. Not a whole lot on the bullish side, so that's not really that encouraging. And to add insult to injury, we've got bear treasuries are bullish this week. So Stocklabs says you're kind of clear to press the trend in rates moving higher. I mean, it's sort of has enough momentum now. It's going to go. So, yeah, that won't be good for the market. I mean, you see what has already happened just preparing for the rates breakout. When the rates actually do break out, market is still not going to like that. We've got some kind of EM income ETF. I'm going to ignore that. Basic materials bullish this week. And okay, we can just ignore EM because both of these 3X ETFs, the bull and the bear, are on here. So just ignore. And on the downside, let's see what we have. Okay, kind of encouraging that VIX is bearish this week. So this is bull VIX ETF, but it's rated bearish, expecting down 9% for the week. Internet bear ETF, Dow Jones is bearish. So bullish internet stocks, bearish tail risk strategy. I don't know what this is. It sounds like one of those ETFs that they come up with that is supposed to be a hedge, but ends up just losing you money all the time. Anyway, it's bearish. Another VIX, some kind of Bitcoin or some kind of crypto ETF, innovator ETF. So crypto bearish this week. China internet bearish. Gold miners bearish. LABD is bearish, so bullish biotech this week somehow. I don't know. If rates move higher, I'm not seeing too much to cheer about in the biotech space. We've got coin is bearish, so another bear crypto call. Ultra short silver is bearish, so bullish silver, bearish natty gas, and bearish consumer services. So, I mean, none of these are really mainstream ETFs outside of the VIX ones. I mean, those are pretty widely traded. Maybe some of the crypto stuff is, biotech kind of is, but not seeing any sort of like stalwart ETFs on here. As far as the sort of mother algorithm for Stocklabs, we got a couple of 3-month oversold signals in the past week, but I tend to wait on the 6-month one. We almost got it on, I think this is Thursday. Yeah, it's Thursday. Almost got it on Thursday, but didn't quite get there. And then the oscillator actually reset kind of a bit on Friday, even though indices didn't really do anything too exciting. So, in order for us to get back down towards like an actual, what I would call oversold condition, you're looking at least one, maybe two decent down days to hit that. I mean, it's not necessary that we hit it, but it would sort of provide some, you'd feel better having an actual signal. Actually, we don't have a single 6-month oversold signal this year. The last one was last October or last September, which was just ahead of kind of the market bottoming out pretty well. So we'll see. Anyway, I think for this week, most likely you're going to see some pretty similar action to what you saw the last couple weeks. Monday has tended to be sort of an up attempt day. Now, if the bulls have sort of run out of gas, then trading down on Monday would actually be better because it would get us to oversold faster. If we trade up again on Monday, I think people are just looking for exit points, so I wouldn't expect the rally to stick again. So you'd probably fade that into the end of the week. We have NVIDIA earnings on, I think, either Wednesday or Thursday. I'm not sure. Stock has pulled back ahead of the print, has a lot of specs in it still. Probably a bunch of people bought the dip hard just because it's been a tank this year. So I think that will provide some volatility on the print for sure. As for overall market direction, you want to see an oversold signal. You want to see a real capitulation before you sort of really leg into, adding risk. Other than that, month of August most likely will not finish out that strong anyway. So any bounce that you end up buying, most likely you'll just be trading it and unloading it, relatively quickly. So yeah, that's all from me. Hope you guys have a good week. Hope you're enjoying the final days of summer, and be back next week. Talk to you later. Bye.